when it comes to depreciation, what's the average? I guess return or the deductions that the Australians will get. Is this something that at MCG you guys have done like a survey and gathered all the reports and see, okay, on an average we're helping Aussies get a deduction of X amount?
Yeah. When we started, I saw a real gap with other industry participants in the tax depreciation space. The kind of conversation was always around, on average we get $5,000 to $10,000 worth of deductions, and that kind of annoyed me. That sort of seemed lazy. It was like, well, that's not an average, that's a range. So from day one, we were collecting the data on those deductions. Now, when you've got a sample size of say 20 reports, because you're a brand new business, no one wants to hear from you, right? So we had to be a little bit patient to launch this figure on the world and the media. But the first time we did it was $9,183, and I remember that for a long time, just because that was the first time I think anyone had ever actually said that. So it changes every day. We're actually tracking this live. We have an internal dashboard that we may unleash on the world at some point. But it just depends on the properties that we're doing, the locations, whether we might do a day of reports and they're all sort of newer properties. But between that $9,000 and $11,000 is where it normally sits. So 9 is probably good as a conservative estimate, and depending on your marginal rate. So if you're on the 37 or 45 percent market, it could be $3,500–4,500, probably $3,500 to $4,000 back in your pocket, and that's in the first full year of claim. So if you're renting it out longer than that, you'll get the benefit of those future deductions as well.
Okay, so if I want to paint a picture here for the viewers and the listeners, so if you just say you can write off $5,000 of your taxable income this financial year and you've just purchased your investment property, is that $5,000 directly going to come into your bank account, or does that how's it work?
Yeah, so no, it's a deduction such as your sort of deductions for work. So if you buy a laptop or a uniform or sun cream or whatever that's relevant to your work, whatever you earn in your pay packet in the eyes of the tax office, the deductions come off that amount. So if you earn, say, $50,000 a year, without any deductions, you would pay your tax on $50,000. But if you have $5,000 worth of deductions, you're paying tax on the $45,000. So that's how depreciation works. It is a deduction in the same way that visiting your accountant is tax deductible. You hear about charity donations as tax deductible. So that's really, it deducts from your taxable income. So if you donate $200 to charity, you don't get that back, but your income will reduce by $200. So then, based on your marginal rate is what that difference makes for you, if that makes sense.